Assalamu alaikum and very good morning. My today's session is about impact of profits and losses on capital. So I start with the transaction. You commenced business with cash rupees 5,000. If you put this transaction in a double entry, the double entry will be, as we know that there are 4 questions which we are supposed to ask. Number 1, what items are involved? Answer is cash and investment, which is capital. Number 2, what is their type? Cash is an asset, investment is capital. Number 3, cash is increasing, capital increasing as well. And number 4, when asset increased, it is being debited. When investment increased, it is being credited. So the double entry is cash debit, capital credit. Now I am taking the same example in accounting equation. Assets is equal to liabilities plus capital. So under asset you will write cash, under cash you will write 5,000 is equal to liabilities. Here liability is 0. So under liability, in the second line you will write 0, second and third line, because the first line was asset, then cash, second line, and 5,000. Second is equal to liabilities, then liability is a loan, and that is 0. Asset is equal to liabilities plus, so you write a plus sign and you write capital, which is investment, which is increasing. So you write 5,000. So accounting equation agrees. 5,000 is equal to 0 plus 5,000. Assets is equal to liabilities plus capital. 5,000 is equal to 0 plus 5,000. So this was the first transaction which I created. Now I'm connecting a link of this transaction to an expense. We must know that all expenses bring down capital. And now the second example, second transaction is this. I paid 1,000 cash for rent expense. So now what items are involved? Rent and cash. So your cash was 5,000. First we make the double entry. What items are involved? Rent and cash. What is their type? Rent expense. We are assuming that we receive the services. Rent expenses, cash asset. Expense is going up, cash is going down. Expense goes up, debited, cash goes down, credited. Now I am taking the same transaction into the first transaction, which was of investment. So there in accounting equation, accounting equation was 5,000 is equal to 0 plus 5,000. 5,000 was the cash. So when you paid 1,000 for rent expenses, from 5,000 cash, 1,000 has gone down, so it means your remaining cash is 4,000 now. There is nothing to do with liability. 4,000 is equal to 0 plus 5,000 was the capital. So now you need to bring down 1,000 in such a way that you can make the accounting transaction balanced. So your capital was 5,000. When you brought down, because of impact of cash, impact of expenses always on capital in such a way that capital will decline. So from 5,000, 1,000 you are supposed to deduct. So now capital amount you will see the amount, that is 4,000. So accounting equation agrees. 4,000 is equal to 0 plus 4,000. You get the point? So we learn that all expenses bring down capital. Now the next thing, I received an income of commission in cash rupees 2,000. So now what is the double entry? On one hand I am discussing double entry, on the other hand I am discussing the accounting equation. So the double entry is cash. What items are involved? Cash and commission income. Cash asset, commission income. Cash assets increasing, income also increasing. When cash asset increase, it is being debited. When income increase, it is being credited. You get the point? Now I am taking this transaction in the previous one. In the first one, 5,000 is equal to 0 plus 5,000. Then there was an expense. Cash has come down. 4,000 is equal to 0 plus 5,000 minus 1,000, 4,000. That was an expense, and now this time income. So 4,000 was the cash. I received 2,000 cash as commission income. So 4 plus 2, 6,000. Cash has gone up. So now cash is 6,000. There is no impact, nothing to do with liability. So live liability. Liability same 0. 6,000 is equal to 0 plus my capital was 4,000. Now we learn here. All income increases capital. So by 2,000 I am supposed to increase my capital. So 4,000 plus 2,000, 6,000. So accounting equation once again balance. 6,000 is equal to 0 plus 6,000. You get the point? So in today's session we learned two things. Number one, all expenses bring down capital. All losses bring down capital. Number two, all profit increases capital. All gains increases capital. All income or revenue increases capital. Thank you very much. Assalamu alaikum. Pakistan Zindabad.